Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am Pushpendra Mehta, and my guest for today is Craig Jeffery, Managing Partner at Strategic Treasurer. Welcome back to the Open Treasury podcast, Craig.
Push, it is good to talk about the news, and I know we have a massive amount of articles and happenings in Treasury and economics to talk about today.
Absolutely. We have much to cover because we have more articles to discuss than usual. We will touch on economy, security and fraud prevention, central bank digital currency, APIs and open treasury, and finally, treasuries wars. You can find these articles in the show notes from this podcast or by looking them up on CTMfile.com. Craig, let's get started. The first story revolves around the Australian economy. Craig, the Reserve Bank of Australia, or RBA, has increased its official cash rate by 0.25%. This increase, the first in more than 11 years, was more than expected. Do you think the RBA has hiked the interest rates to tame inflation and start the process of normalizing monetary conditions?
That's what they've stated as the reason. This idea of removing some of the monetary support that they've been providing makes sense. We see that happening across many of the major banks at this time. So this is just another in the range of central banks bumping up interest rates to, track with inflation and provide the support they need to.
The next story is about Deutsche Bank's new forecast about a deep US recession. Less than a month after saying the US would experience a mild recession, Deutsche Bank has doubled down, saying the recession will be worse than it previously imagined. The bank now expects a major recession in late 2023 to early 2024. Craig, do you share a similar opinion with Deutsche Bank about the deep US recession?
Not quite as much as Deutsche Bank has. Deutsche Bank is probably one of the most negative outlooks for this, much more bearish on having a deep recession and the impact on the U.S. side as well. So while we know interest rates have gone up, we see some of these figures in Q1 numbers where there was a contraction in the economy despite the number of people that are employed. What seems to be a generally robust economy, it contracted in the first quarter. Another quarter means there's a recession. So they seem to be closer to being right, at least in terms of the general direction. But I guess we'll wait and see how that pans out. Hopefully they remain among the most negative, most pessimistic on that.
The next story, Craig, is about the global payments technology company Visa prioritizing cybersecurity due to digital security concerns. Visa has invested more than US $9 billion in security, innovation, and analytics over the last 5 years and has collaborated with thousands of cybersecurity professionals to focus on offensive and defensive protection. Craig, there is a cyber attack every 39 seconds. With frauds on the rise, banks and corporations worldwide are being targeted by increasingly sophisticated criminals. One of the best ways to protect your organization is to educate your people, ensuring that there is company-wide awareness of potential cyber threats and ongoing employee security training through cloud-based platforms like securetreasury.com that can help mitigate current and future cybercrime threats. Craig, in your opinion, is Visa's focus on cybersecurity an indication of a more aggressive stand on fraud prevention? And do you think treasurers should fight back against fraud by investing in educating their teams, given that 84% of data breaches are due to human error, as per the Egress Insider Data Breach Survey 2021?
I think you've made the point quite well in the question, Push. This idea that criminals are more sophisticated, I think, is becoming well understood. But in addition to this, this ongoing and increased sophistication of the criminal, we have this persistent lack of intelligence on the part of the users. And thanks for the pitch for the securetreasury.com service that we offer. But to that point, you mentioned what goes on. But what's happening in the environment, what are people doing or not doing, is the human element, the human firewall, as Adrian Turpak likes to say, needs to be upgraded continually. When we have over 78% of those who receive unsolicited links in their emails, click on them. Knowing all that we know, even 4 years ago, that would seem outrageous that it would be, even over a quarter, but 3/4 click on links that are unsolicited links. Just click in and see through what happens, knowing what's going on with phishing, with malware, giving up credentials. So that's part of this ongoing, perhaps intentionally negligent behavior. By the same time, we see that more than half, 51%, use the same passwords for most online activities. Again, these passwords are being shared on the dark web. You can get notifications from your credit card companies. Once someone has associated a password, if you're using it in all these locations, this is not even close to being diligent or reasonable in our procedures. So the fact that Visa is prioritizing this activity is a helpful sign, but the human element is, we've always known it to be the weakest link. This is just more indication of how weak that link is, not following the right type of procedures. Given the increase in threat we've seen, the lack of preparation on the part of people, this is an uphill battle and it needs to be addressed. Paul from Visa makes a lot of good points here, and their investment is well worth the effort.
Glad to hear that. The fourth story up for discussion is the Central Bank of the Philippines' announcement that they will launch a wholesale pilot of their central bank digital currency, or CBDC, as a part of its efforts to promote the stability of the Philippines payment system. Craig, unlike retail CBDs, wholesale CBDCs are restricted to banks and other financial institutions. Why do you think the Central Bank of Philippines opted for wholesale CBDC over retail CBDC?
I'm not sure exactly why they prioritized one component over the other, but the fact that they have seen an increase, a doubling, between 2018 and 2020, a doubling of some of these digital payment methods means that they're a country, growing like many of the top countries, growing in the use. And the idea, I think, is primarily not in country as much, not to consumers, but they've described it as to support cross-border money transfers, make that easier to manage intraday liquidity. And it's not automated with the central bank, but it's just another example of one more bank testing CBDCs and moving in that path to support a new digital transfer value mechanism.
The next news item, Craig, that caught my attention is about Bitcoin, widely regarded as the best-known cryptocurrency, receiving a further boost from Goldman Sachs that issued its first Bitcoin-backed loan to a borrower. Is this loan a crucial step toward broad-scale adoption of cryptocurrencies by Wall Street?
This idea of letting Bitcoin be collateral for a loan, provides, even though it's Bitcoin, I think we know how volatile Bitcoin is. But if someone holds significant assets in terms of Bitcoin, they don't want to sell it. They want to put this up for collateral. Here is just another way of collateralizing a loan, whatever it happens to be for, which usually when there's collateral, the rates are lower. And so this provides some type of financing without creating, taxable events. Really interesting to see this expansion of what we're doing with some of these digital currencies in the new environment.
Moving forward to the next story, Kyriba, a global provider of cloud-based financial and IT solutions, announced the launch of a new API connector with ICD, an independent portal provider of money market products, to reportedly provide CFOs and treasurers with real-time visibility of cash and short-term investments. Craig, from your perspective, what are some of the API benefits via Kyriba and ICD?
Yeah, so these two big players, Kyriba, probably the largest TMS provider in the globe, a SaaS provider connecting with ICD, extremely well-known, money market fund portal, investment portal. The fact that both of them are specialists, and you're going to have many companies that are net investors that take advantage of money market fund portals like ICD. People are using systems like Kyriba for cash flow management, cash positioning, forecasting, and everything from accounting and trading. All of these activities requires there to be feeds between these systems. And in an era of open banking, open treasury, we want those things to be connected. We can connect a really hard way. We can connect a hard way, a medium, or an easy way. And APIs represent an easy way. Easier to connect two different systems, easier to transact in the specialized platforms. And so it's a way of getting the best of breed without all of this setup headaches. And so this is one of many, many, many stories that we will see, and one of several stories that have come out where fintech firms build easier connectors, make those libraries available, and now their users benefit from it's easier to do business with both partners. They're more integrated, more seamless. I think we saw, ICD stating with a single sign on a deep integration with Kyriba, and all these benefits that exist. And when we talk about deep integration, we've heard people say deep integration for years and years. Well, an API truly is much more transparent integration. We don't need to think about deep as much as is it seamless. The less we think about it, the better the depth is and the power of that type of connectivity. So APIs are really gaining ground here in this story.
The European Union antitrust authorities have charged Apple with restricting access to competitors to its NFC chip technology. Do you think the EU will impose fines on Apple or force them to open their mobile payment system to competitors?
Yeah, I think the broader issue in this section about APIs, open banking, open payments, and as we talk about Apple here, what is the direction that payments, connectivity, banking, where are all these going? They're not going to proprietary systems and platforms. That doesn't seem to be a winning strategy in today's environment. Even going back a number of years, you may have a dominant platform on the mobile phone, and then you can take advantage of that. But what we're seeing is this move to open banking, open treasury, open payments means your winning model is being more open. You want to take advantage of what you have, but trying to overly restrict things is a challenge. Now, Apple brings up the point that they're not the only payment mechanism, et cetera. I don't think this is going to be solved by antitrust activity. I think these types of issues are going to be solved by companies saying, we can do better if we use the open model, where we can play with other parties, even competitors, whether it's, I know we've heard the term co-opetition, but this idea of, I can win by being more flexible and open. I think that's where much of banking, much of payments are going. And we'll see what happens here too. Closed isn't winning the game.
The next story to my mind is on expected lines. More Russian banks are said to be evicted or expelled from the SWIFT payment network, according to a report from the AFP News Service. Craig, do you think Russia's ruble-based payment system, the SPFS, or China's cross-border interbank payment system, which processes payments in Chinese yuan, will act as an alternative to SWIFT?
Those countries want that to happen. I don't think they'll gain significant traction. They'll gain some. Those are, China in particular is a large economy. Will push people onto that. The idea of this Treasury's war section that we're talking about, you have SWIFT and the EU and the SWIFT owners kicking a number of Russian banks off and that looking to expand. This is part of the ongoing battle. I mean, we saw that with the U.S. central bank, Treasury's war. I don't know if anybody who's listening has read, I think it was called Treasury's War by Zarate. It's using and leveraging the power of economies, banking to stifle terrorism. Well, it seems like it's being expanded now for war, especially, wars like we've seen with Russia's brutal invasion of the Ukraine. And so we see this being used a little more broadly. That's going to continue to push states that are either pariah states or that are much more non-Western to be a little more leery. You still have to look at the power of Europe, US, some of the Western nations as dominating the global economy and trade. And much of trade has to be has to be global and supported that way. So I don't see SWIFT losing too much traction in this battle, but certainly these alternative methods, they've been pushing these for a number of years. We expect them to continue to do that.
Interesting that you mentioned the word non-Western, because my next question may have some connection with that, which is the penultimate story for today, is about how economic sanctions imposed by Western countries to punish Russia for its invasion of Ukraine may splinter the global financial order, according to a statement by Jane Fraser, Citibank CEO. Will this mean that the non-Western corporate clients of Western banks will wean away to non-Western banks for their global trade and finance requirements? Or do you see some other developments in the light of the Citi CEO statement?
That's that person's viewpoint. Just like the previous discussion about SWIFT shutting down some activity. It's kind of like you hear of a friend who's in their upper 30s or they're like 40 and they have a heart attack. It almost seems like they always die when that happens. Now, if they're in their 50s or 60s or 70s, they tend to live. There might be a serious heart attack, but all the other arteries and all the other arteries that are around as you get older have had a chance to take on more capacity as certain things have been restricted. And I hate to use that as an example, but when Russia was shut off from so much of their activity, it was more like a heart attack on their economy. And so they experienced this back when they did the last invasion and annexation of Crimea region of the Ukraine. And so they've been trying to build up the other arteries for trade. There's been a multi-year, essentially a decade-long push for this. I expect it to continue. There's certain axes of entities that would want to have a separate tool that they could use to run this activity. I think that's inevitable given where we are and what we try to do to tamp down some of these other conflicts. And we're using the financial systems to do that. Now, to stop terrorism, that seemed awesome. To prohibit or to blunt the effectiveness of those that are willing to launch military invasions for the types of reasons that are listed. It's becoming more costly to go against the general trend, but those that want to go their own way, want to have some alternatives. So I don't think it's going to break the financial order. I think they're going to be set up. They can handle some of the activity, and that will minimize the power of Treasury's war. Those tools will be blunted. Extremely effective the first time, second time, third time they're being used, but people are working at minimizing that.
Interesting. So finally, Craig, what is your choice for the biggest, the most important story of the past week and why?
Push, I think we went through 9 stories in today's review. So that makes it really difficult. The Visa prioritizing cybersecurity is quite interesting to me because of how poorly the human element has responded. And yet I don't think that's the top story. I'm going to go with Goldman Sachs issuing the first Bitcoin backed loan because that's just a continuation, an extension of where we see things heading. That's probably the most significant story to me this week. How about you? What's your top pick?
It's ironical that you mentioned Visa because I actually chose that. I thought that the Goldman Sachs story, the Bitcoin backed loan, was very interesting and I was reading about it. But I thought that Visa prioritizing cybersecurity, one is because the Russian invasion, growing incidents of cyber warfare, and so much more going on. Corporates are really worried with the growing menace that, to my mind, that was the important story of the week. And also because there is a need for greater investment in cybersecurity and employee training. After all, employees can either be your greatest defense or your biggest vulnerability. So that would be my choice. But Craig, thank you so much. That was such an interesting conversation. I personally benefited a great deal from it. A big thank you to you and to our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.